Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is January 21st, 2021. And the big story today is we've got a little bit of rotation. So you really need to be on top of your game right now, where some of the EV stocks, the electric vehicle stocks, which were pretty much on fire for a period of about 6 or 7 weeks, kind of cooled off a little bit. And John Lynch, one of our members yesterday, had asked if they're kind of being put to the side right now in the bigger picture. And it seems like they are until we get a little bit better price action, at least over a week. It's going to be a little bit more challenging to have conviction in those stocks. However, we do have some old school, I guess you would say, big tech stocks right now, old rivals that gave us some of the best price action today that we're looking for follow through. So we're going to be looking at Microsoft today at a key breakout level that we actually took the trade on about 2 weeks ago and it failed. Took the stop loss. Now it's right back up to that level again. And look, we only need one of them to follow through in a big way to pay for all those small losses. So we're going to look at Microsoft. We're going to take a look at Apple also, which actually had some pretty good intraday price action yesterday. A couple of crypto stocks we're going to look at. I know crypto is getting beat up just slightly after that explosion to new all-time highs, pulling back into support a little bit. So we're not trading crypto, but we're trading crypto-related stocks. We're going to take a look at two of those today, and we're going to get a little bit into some home builder stocks that aren't quite ready yet, but definitely want to be on your watch list for the next push, the next pause, and then look for the next swing trades. We're going to start out with the market, though. The market actually, it was kind of interesting yesterday. A lot of the stronger stocks that we had coming into this week and yesterday, it was kind of odd where we were seeing selling yesterday into the market making new highs. So a lot of the stocks we had on our list yesterday, which have had a nice run for the last 3 to 5 weeks, you would have thought they would have got one more push through. And they actually got bullish gaps, but kind of rolled over, which really means that you need to be on top of and respect your risk as well. The next stage of trading for a lot of people is getting to the point where you understand what good ideas look like, and then you actually learn how to manage those trades. Finding a good idea and making money on them is not the same thing. I'm sure you're well aware of that. If you're watching this and you've been in the market for a while, it's really not that challenging to even run the most basic scanner and find a stock that's going up. But are you buying at the right time? And here's the key. Are you exiting at the right time? Yesterday, we had a couple of stop losses. No big deal. Part of trading, right? Anybody who tells you they don't have losses is quite honestly full of beans. We do. It's a part of trading. It's a part of accepting all of that upside for the reasonable risk, right? So we had a few trades that pulled back yesterday, and we were having conversations about whether or not you should be looking to take shorter term profits on those trades. And there's one really big key. If you are swing trading, fight the urge for intraday price action to take you out of a good swing trade. If you're looking at those longer term trades, you don't want a 15-minute chart like shaking out on one candle. The thing goes down because you got scared. In 1 hour, the thing was going down, and then at the end of the day, it's closing near the highs. We actually have two examples of that. One is a trade that we made last week that we are looking to exit on a profitable push higher today. It's kind of reached almost up to the profit target, not quite there. But the way the overall sector is not as on fire as it was before, and on fire is a clue there. We might be moving it up. But what I want to talk about is the fact that we had the entry, it pushed up and then paused like immediately after. We had a few new members in the boot camp asking, should we be booking this profit or getting out for a small profit or a small loss? And the answer was absolutely no, because there was no reason to. And that's actually a big part of trading is if the idea has not changed, you need to stick with the trade. It's only when the idea changes and pulls back and you have the possibility of a profitable trade coming back down to your entry price, only then do you have that decision to make. Do you move up your stop loss from your original stop loss? And really, at what point do you move it from a stop loss up to break even, up to a trailing stop? That's really where the money's made, is making that distinction between stop loss, break even stop loss, and then now it's moving in your favor and you're going to trail it either up and get out into momentum, or if it pulls back a little bit. My personal preference is once I have a profit targets that's reached, which is a minimum of 3 to 1 on all of my trades, what I'm then looking for is once it hits that level, typically I'll scale out of a little bit and then see what I can get on the balance. Because if I get to 3 in exchange for the 1 that I was looking for, I'm okay with that. That was the whole plan of the trade. That's not all I'm trying to get, but I'm okay with that. Look, if you're actively trading and this is what you do for a living, You gotta pay the bills, right? So you can't be looking for the exact top and the exact spot every single time. Sometimes if it moves in your favor, it does exactly what you want it to do. Get in there, pay some bills, and see what you can get on the balance. Maybe even add if it pushes and pauses and you have another opportunity. So we're going to head over to the markets. We're going to take the first look at the SPY and the Q, and then we're going to take a look at some opportunities. If you find these videos helpful, definitely please do me a favor, click down and subscribe. I would really appreciate it. And if you have any comments or questions about the stocks specifically that we talk about in these videos, I'd love to hear from you in the comments as well. Okay, so let's head on over to the charts. First, we're going to take a look at the SPY, and then we're going to take a look at the Q. So this was the previous all-time high in the SPY. 2 consecutive bullish gaps, good volume. Obviously, a lot going on in the world right now, but we got follow through. That's the big thing. Now, the question is today, when we get a breakout, it's the single biggest thing we're looking for is, do we see what we need to see? And so in other words, today we need to see what we call a well-bid candlestick closing on the high, which means higher highs, higher lows, and follow through. If we open higher today and immediately trade back into yesterday's price action, that's not really what we want to see. So today's close is going to dictate how we expect the market to follow through. But this push and pause and then a breakout, that's pretty good. What I want to see, though, is a little bit more of this, not this. All of these melted candles, all of these indecision candlesticks means that there's no clear path from one day to the next from buying or selling pressure. The bullish gaps the last couple of days are impressive, but we need to see some follow through for more than one day. So the NASDAQ broke out, which now has us watching. As you can see, this 224 level in Microsoft. This was the trade that we actually took. We got a breakout, moved a little bit in our favor, closed immediately back below 224. So small loss on that. Again, respecting your risk. You're not riding it all the way back down. You don't have that thought process like far too many people have right now, which is stocks always come back. And yeah, it came back now, but the stock also went down over $10. I'm not willing to sit through that. I have my acceptable risk in exchange for the next profit. Now I'm going to look for the next trade. So this is the key. I'm not looking to get involved in my full position today. As long as it's above 24 and gives me an entry signal, which we talk about in the boot camp, I'm not going to get involved unless I get that. But this 224 and then looking for new all-time highs is the trade. Apple is interesting as well. Apple had a really good solid push through. It took out the last couple of weeks. Now 138 level is actually where we had the last trade from this breakout of 121. Danced around a little bit. And finally, actually, I'm sorry, 120 was our breakout, pushed out, and then we were looking for 138. So now we're looking for it to stay above the most recent breakout. Now, the problem here is, what is the upside? How much do you need to risk in Apple right now in exchange for the potential reward? Based on where it closed yesterday and where it looks like it's trading pre-market, it's not that far away. It's only $4 and change away from what a lot of technical traders would call a double top. So today we'd only be looking to initiate first piece of the Apple trade, looking for it to push, pause, and get above that 138, and then look for the next move higher. So it's 2 pieces on the Apple trade, and waiting for confirmation intraday today on the entry. Now, what I said before about not letting a swing trade take you out, that was on an existing trade. What I'm talking about here now is working the order in Microsoft. If you want to be conservative, wait for today to end in Microsoft and see if the price action confirms above the that 224 level. The 2 stocks I was talking about before, one was the optimal entry here that we had in SOL, and you can see that it kind of danced around a little bit within that window. Our original target here was 28.29. We got very close to that yesterday. Consider taking some of the money off the table, and it was roughly a $7 profitable trade in just over a week. But you can see here some of the newer members like, can I get out? Should I get out? And no, the answer was no. There was no reason to, other than you wanted to book a smaller profit. So again, this is really where the long-term profitability for a trader comes from. Do you book the quick $2 on a swing trade because you're nervous, or do you hang on, get another higher opening here today, and maybe book $7, even if it's $6 to $8? That's 3 times the profit. The other trade that we're watching right now is Etsy. We actually had a new trade in Etsy. We had a buy stop, which we discussed yesterday, at 213.50. So the buy stop was 2 days ago. Today's Thursday. The buy stop was Tuesday. Moved $10 in our favor, more than $10 in our favor. Right? Where did it get up to yesterday? 225.74. So roughly $12 in our favor. But that wasn't the goal. That wasn't the objective. But it pulled all the way back yesterday within 22 cents where we were looking to get in. And I got, again, a bunch of people asking, should we get out? And we're like, no, stop watching those 5-minute charts. For a swing trade, held the trade, and you can see it's actually turning around a little bit from yesterday's low. So it looks like that decision was a good one, but it's really more of a lesson. A lot of traders, I want to come back on the screen here just really, really quick. I just can't stress this enough. If losses bother you, that simply means you're not making enough on your winning trades. And these kind of small decisions, should you book the quick $2 or hang on and risk the stock coming back to break even in exchange for the next $8 move or exchange for the next $25 move, whatever the stock happens to be. It's in those moments of decision that you really need to, we call it hashtag trade like a pro, that will make the difference between booking 2, booking 6, booking 10, booking 25. I'm telling you, if you hate losses, and again, they're annoying. However, if you understand the difference between chart reading and making more money because you're acting like a trader and you know when to do that, that's the difference between seeing your account go like this every month and seeing your account go sideways and complaining like a little child that you have losses. Losses are a part of trading. It's not the losses. It's you're not making enough on the winners. And look, if you want to learn how we do this, you get my exact stop loss, my entry, and my profit targets. Click down and at least learn about what we do in the boot camp, and you might find that it's for you. It's not a subscription. It's just basically a long 30-day seminar. And if you want to stay after that, fine. We can talk about longer term working together. But I'm telling you, these little decisions make the difference between your account growing and you doubting your ability. If you're watching this right now, you probably have the ability to do it. Maybe there's just a couple of pieces, but you have the desire, which is why you're watching this. So again, listen to the clues of what we're talking about. And those two trades are really pretty interesting trades. I'm willing to let a trade come back and break even on it. So the worst case scenario on the trade is I didn't make money or lose money other than a commission in exchange for when it wiggles and jiggles and comes back and then finally takes off. Focus on the ones that took off and kept going, not the ones that you had a small profit on. So those ones that keep going, those are the ones that will make you a real trader because you have the guts and the conviction to follow the order flow and let the order flow do the hard work. All right, so we're going to head back over. We're going to take a look at a few more ideas for the day. So TDOC broke out yesterday. This has been off of our radar for a while. There's merger talks and that kind of stuff. You can see it finally punched through that 240 level. Again, we're looking for follow through here. We're looking for another well-bid candlestick. We talked about the Homebuilder stocks before. Now you can see they've rallied the last 3 days. They're well bid into levels. So LENNAR, you can see the last time, you might remember this a couple of months ago, we were looking for it to punch through 85, did not get through there. I'm looking for 85 as my alert right now. Toll Brothers, just to give everybody a complete rundown, very similar, 50 in Toll Brothers right now, and DHI. So these are not trades that are set up yet. They're trades that need to be on your watch list. So if you remember watching yesterday's video, we said set that alert so you don't miss the trades. It's one of the biggest things that new members of the community are like, I missed the trade. Get in the habit of setting the alert and you will never miss a trade again. All right, CIGNA as well. Finally punched through new levels. This is big. 220 was the level we've been watching. You can see going back. And again, very important to know where sellers did something significant the last time. 225 is really dialing it in. Closed above 225. We're looking for this to go well bid again today. Zillow finally punched through as well. Now Zillow had a bullish gap, but did not close near the highs. It actually closed in the lower portion of the range. So I'm not trading this yet. I need a little bit more conviction, but again, it's in the watch list. A couple of gaming stocks. Electronic Arts, again, broke this trading range, but you can see this is where sellers did something significant last time. So I want to see follow through today. It looks like it's going to open flat. ATVI, another one. ATVI actually looks a little bit better, but again, if we zoom out, we can see where that breakout level was, and we are good. So actually we have 292 is the breakout. Again, up here it traded, but it came right back in. So this is really the level we're watching for. Now it's well bid, bullish gap, 2 days, looking for follow through in ATVI with the stop loss very obvious there. Now the two stocks that were crypto stocks that I mentioned before, one was RIOT and one was Mara. They've cooled off a little bit with crypto. They actually now have pulled back for multiple days. I am actually looking for both of these stocks to open flat, test the previous day's low, and then look for support. So they might open a little bit below both of those levels, but if they recapture yesterday's low, then I'm going to start looking for a new opportunity to get long. Wayfair actually exploded last week. Just an amazing stock to be involved with last week. Pulled back now for 3 days. So you could say it's kind of a push and a pause and closed on the low for a couple of days. Again, it's very similar. I'm looking for this to hold yesterday's low, but I'm not going to look for a new entry until it gets back above 300 and then look for that run right back up to the 350 area. And then, of course, Netflix. It's going to be a day trade. Today we're going to be looking at the bullish echo in Netflix. If you're not familiar with the bullish echo, it's something that we taught in Stocks for Breakfast recently, which is really a stock that is obvious as a swing trade. The order flow is good, but the tape is telling us it's a little bit late to get involved in a new swing trade because the risk is hard to manage after it goes that far, that fast. But the bullish echo means that we can continue to day trade that stock with a tighter risk. Let the stock pause after we day trade it. If it starts to roll over, we leave it alone and then look for another swing trade. So right now, Netflix fits that bullish echo trade. So if you have any questions about these stocks specifically, please leave a comment below the video. I'd love to hear from you and definitely subscribe. I'd really like that. I'd like to ask that favor. It would mean the world to me. And if you want us to talk about anything, also leave me a comment down there. If you have questions about the boot camp, I'll be more than happy to get back to you as well. Have a great day, everybody. Respect risk. And let's see what we can do today.